What's up, guys? Welcome back to DCA. Today what I'm going to do is talk to you guys about the DCA index. This is a risk management metric which I've coded for several coins so far, including Bitcoin, Ethereum, Cardano, and Solana. Now, what this metric does is essentially helps you with your risk management of these various coins and tokens. So I'm going to be releasing this model today on my Telegram channel. That is, I'm going to release the TradingView indicator, which corresponds to each coin or token. So for instance, here you can see we have the Bitcoin USD DCA index. And as this rises, this indicates that you're more than likely nearing a market top, at least a temporary market top. And as it trends down and approaches zero, it indicates that you're more than likely reaching a market bottom. Okay. Now, as I said, it's coded for multiple coins at the moment, but I need to say this, and this is very important. Bitcoin has by far the most data, and therefore the model is hands down the most reliable. As you go from Ethereum to Cardano to Solana, there becomes less and less and less data. As there is less data, the model is less reliable, because the more data we have, the more powerful the model becomes. So that's very, very important to keep in mind, guys. So, like I said, and this is the standard disclaimer, this is not financial advice. This is just how I use these models, and I'm going to show you that. And you need to do your own research. This is just how I am using these indicators, okay? So, Bitcoin, you can see we have plenty of data going all the way back to 2013, back to 2012 even. And this model fairly accurately assesses when you are reaching a top or a bottom, okay? So just a quick rundown. I've done some other videos on this, but in brief, when you're below 50, you should be DCAing more as you go lower. So if you were, say, DCAing on average $100 a month, maybe you would do $50 if it were between 50 to 40, and then 100 if it were between 40 to 30, etc. 150 as you go down, and then 200, and then maybe 250. Something like that. Just in general, as you go lower, it tends to be a better time to purchase whatever the coin or token is. And then as you go up, you should be slowly selling. So maybe, you sell a small sum between 50 to 60, and then slightly more at 60 to 70, and then more percentage-wise, so on and so forth, all the way until you get up to this highest index band. Once you're in the highest index band, it's very likely that you're extraordinarily close to a market top. Now, this doesn't mean that you are necessarily at the very top, okay? A model like this is not to attempt to, predict that on this date, this is the market cycle peak. It happened to be the market cycle peak on that day, but it could have been this day, or it could have been this day, or any of these days. It just indicates that, the data indicated the market was extraordinarily overheated and needed a pullback. And that's what happened. You get crypto winter following this top right here. Similarly, if you come to 2021, you can see in January, it approached the 90 level. It didn't quite hit it, but it approached it. And then in February, at approximately $57,000, it did get to the highest DCA index band. So that would have indicated I unloaded Bitcoin in February. Okay. Again, you would have to make up your own decisions as far as that goes. So now you might say, well, we didn't hit the market cycle top until out here in April. Sure. But like I said, I'm not trying to extract the very last dollar that I can. So unloading at 57,000 is perfectly fine for me. If it continued higher to 70, 80, etc., so be it. I'm fine, knowing that you're DCAing through this region here and, making 5x. Now, the way that I will use this model specifically, not only would I have unloaded here at this point, I would have started moving, as I make each sell, I start moving it into my preferred altcoins. Okay, so that brings us to this. So, like I said, and again, I cannot stress how important this is to take note of. There is less data for the altcoins. So you cannot be as confident in the altcoins, in the altcoin models, as you are in the Bitcoin model. Okay, so, and the same principles apply. You are DCAing into whatever your preferred altcoins are during these times when it's down here. And additionally, you're DCAing in when you're unloading your Bitcoin position during the bull run. So just as an example, in a given month, let's say we aren't in a defined bull run and, it is somewhere in the middle of 2018. Well, what I would do then is maybe make something like, and I'm just throwing out numbers here. Your numbers may be different, but this is how, in general, how I would approach it. Maybe in, 2018, when we're in this downtrend, I would be most heavily investing in Bitcoin, followed by Ethereum. And it may be something on the order of 60% of my DCA every month is Bitcoin and 20% is Ethereum. And then, other coins like Cardano and Polkadot. And so they will get a smaller percent all the way down. So you're just acquiring based on where you're at on the DCA index band. And you'll do it in accordance with whatever your set percentages are. So, if on average, I'm going to do, or let's say at this wristband, I'm going to do, $100 of Bitcoin. So if we come back to the Bitcoin chart, if at this DCA index band, let's say I'm going to do $100 of Bitcoin. Okay. And so we'll go to 2018 just to match up. So, $100. Well, since I'm down here, maybe I'm going to do 100 here, 150 here, 200 here. And then when it comes down here, I do 250 every week. And then when it's down here, maybe I'm doing 300 every week. And now in the same vein as that, let's say with Ethereum, because remember, I'm primarily accumulating Bitcoin in the bear market. So let's say with Ethereum, if I'm doing 60% of my total monthly investment in Bitcoin, 20% of that will go to Ethereum. So, maybe that's something like $50 here. And then, or, $20 here, because I think I said 50 for Bitcoin. Like I said, I'm making up numbers here, guys. You have to sort of do the math on your own, how you want to distribute. But maybe 20 here, 40 here, 60, 80, and then 100 down here. Something like that. The point is, you want to be acquiring more as you're going down. And then using those same numbers, let's say with Cardano, it's something like 10 is the base. So then it's 10, 20, 30, 40, and 50. Okay? So all through these areas, I'm acquiring. Now with altcoins, I will tend to have a higher tolerance for buying into these, these more intermediate levels. So I may be willing to buy Cardano all the way up to say 60 or even 70 sometimes, especially in the setting of in the middle of a bull market when I'm moving out of my Bitcoin into other positions. Now, in the setting of a in the setting of a bear market, if we're still not in a confirmed bull market, maybe I will sell a little in this range. In this case, I did nothing. Just for reference, I did nothing here. So that's an option also. You can choose to do nothing. So, you kind of have to plan how you will model your investment strategy. Now, I will do actually a more full, in-depth guide as to exactly what I'm doing, so you can get a better idea of this rather than me just sort of, laying out these rough sketches here. But that's sort of the idea, guys. So, in the setting of a bear market, I'm accumulating based on a percentage, right? So you have 100% of your total investment. The majority of that is going to Bitcoin, and then a smaller portion to Ethereum, and then a smaller to whatever. And for me, Cardano, I'll just be upfront. Cardano is my third most accumulated investment. So now there are some coins that I won't acquire whatsoever until the setting of the bull market, when I'm moving out of my Bitcoin position. So, up here in January, I sold some of my position. Okay, I sold some of my Bitcoin and moved it into some of these. And the reason for that, I've laid out in some other videos. It's because the altcoins tend to lag behind Bitcoin when Bitcoin is going parabolic. And then they start to move against Bitcoin once Bitcoin has had a correction and then starts to move again. Okay, so like for instance, if you look back in 2017, we talked about this yesterday. If you look back in 2017, Ethereum actually had its highest valuation with relation to Bitcoin here in June, not in January when it hit its USD valuation peak, meaning it was actually better to hold all Bitcoin from this time forward than it would have been to hold any Ethereum. So even though Ethereum went up, about 3.25x from right here, from this point in June, it would have been better to hold all Bitcoin. And I'll just show you here, guys. The DCA index would have got you out of your Ethereum position. You got nearly to 100. So you would have been completely out of your Ethereum position. And if we can go to that point in 2017, if we just go to 6. So you would have sold all your Ethereum right here, and you would have started, just acquiring some more Bitcoin if you could. Now, like I said, you're not always going to extract every last dollar. And that's just the nature of, what type of investor you are. I'm not trying to predict the one day of the hundreds of days of the market cycle that the market cycle peak is on. So if I have to leave some money on the table so that I don't get hammered as the price is plummeting, that's fine. That's fine with me. Okay? So, with things like this, you also have to have some fluidity. The way that I approach the market during the bear market can be slightly different than the way I approach it during the bull market. So, while I may have sold all my Ethereum at this point, I nonetheless, even though you were only down into this 50 to 60 and 40 to 50 range for a relatively short amount of time, I may still then choose to reacquire some Bitcoin. And that's for the fact that when you're in a confirmed bull market, it's likely, until proven otherwise, that Bitcoin will continue to go up, especially it's something like this situation where you haven't yet got above the mid 60s. Okay, you hadn't yet spiked into the 80s or the 90s or even the 70s for that matter. So until you start to get into these levels, like we did in like we did in January and February, it's likely that Bitcoin still has some room to go, right? Like when we were here in November, we had a small correction and then we continued up. So that's basically what this is, guys. That's kind of how you use it. And like I said, I will go do a full video on how I'm navigating this exactly, rather than just giving you this rough outline. So we'll do that shortly in the next couple of days or whatever. But that's kind of just a brief synopsis of what this is, how to use it. And remember, head over to Telegram if you're interested in this. And there will be instructions on the Telegram channel, and just sign up for it, and I'll try and get those out as soon as possible. All right, guys, if you guys like this content, hit like and subscribe. And until next time, see you.